Hello. Oil prices were bullish this week, with potential supply cuts being the main driver, whilst gas and electricity contracts saw strong losses as supply and demand fundamentals are healthy. Let's take a look at the week's actions in some more detail. Trading was choppy on Monday for oil. Jan 20 contract closed the session lower, over $1.5 per barrel, whilst the Feb 20 contract made gains as data suggested higher demand from China following strong Chinese factory data. Also contributing to the longer dated contracts movements was news that production cuts by OPEC are more likely. Prices then closed flat on Tuesday, and this was despite prices seesawing during the day. Initially, prices fell as President Trump announced that a trade deal with China wouldn't happen until after the US elections. However, in the afternoon, attention was diverted to the talks between OPEC and non-OPEC members regarding production cuts. The weekly EIA report issued on Wednesday showed a reduction in stocks of 4.9 million barrels. Whilst this was a smaller than expected loss, the news pressured prices higher. As OPEC met this week, market participants expected an extension and deepening of the current production cuts. Front-month Brent gained $1.85 per barrel day on day. Prices continued to climb on Thursday. OPEC are reportedly considering cutting production by an additional 500,000 barrels per day, which is the biggest amount that has previously been considered. Last night, front-month Brent closed at $63.56 per barrel, up just over $1 per barrel compared to last Friday. All gas contracts eased on Monday thanks to a number of contributing factors. Temperatures for December are forecast to be higher than previously expected. The system was long for most of the day. LNG imports look healthy, with 13 tankers confirmed, and carbon prices fell nearly 4% session on session. Prices continue to soften throughout Tuesday. Monday's fundamentals remained unchanged and as such continue to weigh down on prices. It was another bearish day on Wednesday, and this was despite the gains seen on the oil market. Gas prices eased on the back of a healthy supply and demand outlook. All contracts slid further on Thursday, with near-term contracts making the biggest losses. Jan 20 fell a penny a therm, whilst Winter 20 fell 0.75 pence per therm. Last night, following a bearish week for gas prices, all contracts closed lower compared to last Friday. Winter 20 lost 3% and summer lost 4%. Power prices fell on Monday, taking their direction from the weaker, wider fuels market. All contracts continue to take their direction primarily from gas on Tuesday. Further downside was offered to prices as wind generation was forecast to increase. Prices continued to soften throughout Wednesday and Thursday. Wind generation outturned 20% above the average, which was significantly reduced reliance on CCGT. Last night, all seasonal contracts closed lower than last Friday. Summer 20 lost £1.5 per megawatt hour, which is a 3% loss. You can download the full version of this report from our website. Thanks for watching, and we'll see you next week.